Hey, what's up, guys? This is Cody the Coin Raptor, and welcome to my channel. I'm here to provide you the best crypto content you can find in 10 minutes. All right, starting with our Bitcoin chart. All right, so with Bitcoin, I've put here on the left our volume profiles, and I've featured this before on my channel. These volume profiles will show you the historical volume based on the price. And you can see here on this bar over here on the left that the big volume spikes that we've seen so far between 17,700 and about 22,800 or so. So what this means is historically there has been a ton of volume in this little region here. But if you'll notice, above and below it, there aren't as much volume. So what that means is that if Bitcoin can go on a run, then it could potentially go and reclaim this whole area here above this level until you get to about 28,000 or so, because there's just not a lot of historical volume at this range. On the contrary, if it dips below 17,000, there's no historical volume whatsoever, and the largest volume that we'd see at that point would be at about 12,000 or so. So either way, if Bitcoin can break out to this point above 22,600, it can really run. All right, so that's key here, and I want to show you something else that's completely that's key as well, and that's this 200-week simple moving average. I've talked about this quite a lot, but it bears saying that this is an incredibly important level. This 200-week simple moving average is something that everyone is going to be paying attention to, and right now it's sitting at about 22,700. So the longer Bitcoin can stay above this range here, the more bullish I think it is, because if it stays above this range, then it'll be using it as a support, and as a support it's been an incredibly strong support. All right, if we let me get rid of this. If we look back into the past here, we can see that the 200-week moving average is barely ever gone under. It's back here in March 20. It was March 2020. It barely went under for about 2 weeks. It went under that 200-week moving average. We go back to 2008, the 2018 bear market, and you can see here it went under for just a brief period, a very brief period here. So about, again, 2 weeks or so. Now this level has been key. We zoom out, we take a look at we take a look at Bitcoin in its entirety, and we can see that this level has been key and has been oftentimes a predictor of a short-term bottom. And the longer it remains above this level, the longer I would be bullish, and the longer it's going to show you that the long-term uptrend is still intact. So if it breaks to this level and it stays below this level, the long-term uptrend, that is the year-long uptrend, will be broken. So the longer it stays above this level, the more bullish I will be. I'll be watching at this point, and I will definitely be looking to buy under this level, considering how key it has been. All right, so let's talk about Ethereum as well. Ethereum, the 200-week moving average for Ethereum is not as big of a deal for that. I'm going to go ahead and get rid of this here. But if we take a look at our volume range, again, for this, we can see that Ethereum's volume range has been, the largest has been about here between 1477 and about 900 or so. Now, in this range that it currently is in, from about 1500 to about 1660, there's not a lot of historical volume, and so it could actually keep moving up and going to almost 1700 at this point. Okay. One important thing to realize when it comes to Ethereum is that oftentimes what's going to happen, the reason why we have this big move up is because of the news on the merge happening in September. But if that gets delayed or it doesn't go smoothly, then we can see a potential pullback from Ethereum. And I expect that when it does finally happen, that there will be a lot of selling on the day that it happens, because that's just how things work. For whatever reason, investors want to get ahead of these events, and then when the event actually happens, then they want to go ahead and sell. So that's something to keep in mind. Ethereum is still struggling to get its way above 1632. However, if it does reach that point, the next resistance level we're going to see is about 1700 or so. That is going to be a key psychological level. We can see that there are many, many points at which the 1700 level have been reached and has been used as a support in the past. So it's going to be an incredibly strong resistance. So let me go ahead and just put that in here right now. 1700. That right there is going to be key. That's the key level of resistance. If it breaks through that level, then I would be very bullish. But it's going to have to break through with very strong volume in order to indicate to me that we have a reversal from the lows here, and then a reversal from bear market to hopefully bull market, and not just a bear market rally. But I think what's most likely, though, is that we'll wind up seeing some sideways consolidation in both Bitcoin and Ethereum as the days play on. Okay. All right. So let's talk about news. Something very important that I want to talk about is regarding the Coinbase story that we covered yesterday, and the SEC, which is doing part of the investigation of the Coinbase insider trading. The SEC has come out and said that some of the tokens that have been listed in as part of Coinbase are actually securities. Now, Coinbase has been pushing back against this idea, saying that it doesn't list any tokens, it doesn't list any securities, and the tokens it lists are not securities. So you may be wondering yourself, why does it matter so much? Why is that so important? Well, the reason why it's so important is because if any of these tokens are listed as securities, it basically becomes a bigger regulatory headache for Coinbase. Okay. Now, let me go ahead and... So the SEC's position is significant as it means Coinbase may be forced to classify some of the cryptocurrencies it offers as regulated financial instruments. So what that means is that they're going to have to go through rigorous disclosure and registration requirements, and that's something that Coinbase wants to avoid if at all possible. So Coinbase is pushing back and saying, no, these tokens that we're listing are not securities, and therefore we won't have to follow those regulations as securities. And the SEC has been notoriously obtuse about what qualifies as security and what qualifies as a digital asset or a commodity. So that's something I'll be paying attention to. If I get more information, I'll make sure to let you guys know. Next, we have over 30% of crypto users will never buy an NFT. Okay, and so what that means is that there is a study that was conducted, and this study was published and shared with this website Finbold, and they said that crypto users are not very likely to purchase an NFT. About 31% or so of crypto enthusiasts claim they would never buy an NFT. So we've seen the popularity of NFTs waning and declining. I expect that's normal as part of a bear market, and during the next bull market, we'll see an increased enthusiasm for NFTs and NFT related projects. But I think that this level here, this number is actually fairly high for people in the crypto space. I know that I personally have bought NFTs, and I've done so, and I expect that other crypto enthusiasts will also come around to buying NFTs as well. So that's something I'll be watching for. We'll be figuring out if these NFTs will be something popular or just a fad. I'm not entirely sure myself, but there are practical uses for NFTs. All right, that's all I got for you today. If you like this content, please let me know. Please like and subscribe. I would greatly appreciate it. And let me know what I could be doing better, as well as follow me on Twitter for the most up-to-date information that I can give you. This is Cody the Coin Raptor, signing out.